Hi everyone, this is Alissa Coram with Investors Business Daily, and welcome to Investing Strategies. On this episode, we're going one-on-one with the CEO of Inphi, a chip sector standout and market leader during the post-coronavirus rally. We'll get an inside look at the factors contributing to the company's impressive growth story. Plus, beaten down travel stocks are starting to surge, but we're still a long way from a full recovery for that industry. The founder of Travelocity joins us to explain what it will take to change consumer perception. And Global X is behind a video game and eSports ETF that's up some 50% from March lows. We're breaking down what's behind this theme's resurgence and whether these catalysts are here to stay. Investing Strategies starts now. Inphi is a standout in the semiconductor sector, with shares more than doubling from a short-term bottom in late March. But Inphi's impressive stock performance and fundamental strength extend beyond the recent coronavirus rally. Here with me now to provide an inside look at the factors contributing to the company's impressive growth story is Inphi CEO Ford Tamer. Thanks for being here today, Ford.
Thank you for having me, Alissa.
So for 6 quarters in a row now in particular, Inphi has delivered notable earnings and sales gains. And the March 2020 quarter was a beat and raised quarter with a high level of growth. So what has enabled the company to deliver the strong gains that you're seeing right now?
Thank you, Alissa. So we are in the bandwidth business. And for the past few years, we've been growing the company very fast, never bet against bandwidth growth. And in this latest COVID-19 crisis, we've seen the bandwidth demand accelerate. And in order to give your listener a bit of a better understanding, let me take a step back and give you a bit of an overview of Inphi. We are in the data movement business, moving data between different applications. So fundamentally, data movement interconnect highways that move data with analog, DSP, and optics type of components between digital islands, which are CPU, GPU, switches, NIC cards, storage. In a way, think of us as the FedEx for data. So the same way FedEx moves packages in the physical world, we move data in the electronic world. So we've got planes, trains, and trucks. Our planes are long-haul metro interconnect that move data over thousands of kilometers, very long distances, under oceans, under desert, extreme weather condition, very long distances. Our trains move data between data centers. So tens of kilometers, up to hundreds of kilometers between data centers. And our trucks are the last mile, if you wish, inside data center, moving data as little as a few meters, all the way up to 10 kilometers inside large cloud data center environments. And so all of the trends that we're seeing today are helping increase that data movement needs, and hence growing our business very fast.
Yeah, well, let's talk a little bit more about those trends. You said never bet against bandwidth. And with the coronavirus, we've seen a huge increase in the demand for bandwidth from the stay-at-home surge and these new habits formed along with that. So can you talk to us a little bit more about those trends you're seeing this year so far in particular and how they're impacting the business?
Fundamentally, this whole movement of from home, whether it's work from home, collaborate, play, socialize, learn, stream, look at virtual events from home, shop from home, has created a number of new virtual experiences, a number of new applications that are driving demand. And you've seen many of these applications report very large increases in bandwidth, very large increase in number of users that are jumping on those applications. One of the recent example, the Eastern concert by Andrea Bocelli, 2.8 million users watching it live, 28 million within 24 hours. New movies being released digitally before being released in movie theater. All the video conferencing system reporting very large increase in bandwidth. Netflix having to turn off the high definition in Europe to be able to have the bandwidth cope within the networks. Telemedicine taking a huge increase, where some hospitals reporting going from thousands of people a year to thousands a day. Tremendous increase in all of the new applications digital, and we're not seeing that stop. We do believe that as we get through that crisis, we will see still a lot of those applications continue. As an example, we've got some of our customers reimagining the factory environment, calling it now Factory 2.0, where they'd like to see more control, more automations. All of the bandwidth that is needed for video streaming. Networks today are not designed for one-way video, multiplayer gaming, all designed for one-way traffic. So you're going to see a lot of this data movement interconnect being reimagined and driving the bandwidth business in the future.
Looking at the future, talk to us a little bit more about how these longer term trends that are playing out, as you mentioned, they go beyond just what we're seeing currently with the coronavirus. So how does that impact your business outlook?
So from our business outlook, we've got three segments that we focus on: the inside data center segment, the between data center segment, and the long-haul, metro long-haul telecom type of segment. On the inside data center segment, we have a product called Pulse Amplitude Modulation, or PAM. It's a DSP, or digital signal processor, that we sell along with our optic solution platform. And so we sell this PAM platform, which in summary, instead of moving data as 0 and 1 that we've been doing for the past 40 years, for the first time, you're moving now data at 4 levels of modulation, so 0, 1, 2, 3, allowing you to pack twice as many bits per optical symbol than you would able to do before. So inside data center, we're seeing a huge change from 0 and 1 for the past 40 years to PAM for the next 10 to 20 years. And that's a trend that's just getting started, that's going to help us grow the inside data center business for major cloud customers in the US and worldwide. The second trend is between data centers, where the major service providers are trying to link those data center as one giant data center. So think about, for example, in the Bay Area, Oakland, San Francisco, San Jose, Santa Cruz, all having data centers and all being linked with this digital highway as one giant data center. We've got a new application called ZR. ZR stands for 120 kilometer. And so we provide these highways, if you wish, that are 120 kilometer apart, and we can link those data center 120 kilometer apart as if they're one giant data center. So if you want to have application like artificial intelligence, e-commerce, recommendation engines, Facebook tagging billions of images per day, we could throw a whole number of data center at the problem, being a lot more efficient. And finally, on the telecom, we're seeing a big revolution coming in on 5G. 5G is going to be a large growth vector, and we're participating in this 5G in our telecom sector. So 3 sectors, a lot of growth vectors over the next few years that we're very excited about.
And of the 3, which one do you think presents the biggest near-term opportunity for the business?
So the inside data center upgrade has started last year in 2019, is accelerating this year, and will continue to accelerate over the next few years. But the inside data center business started this year. The 5G, same, starting this year in China, but we believe US and other Western geography will start next year and again accelerate. And finally, the between data center, or this virtual linking those data center 120 kilometer apart as one giant data center, starts next year and really accelerates into 2022. So we've got quite a few growth vectors that are going to be playing out over the next few years.
Yeah, definitely sounds like it. And with these trends playing out over the next couple of years, how are you future-proofing your business, so to speak, to keep up with all of these technological innovations that are fueling demand for increased data movement that you're talking about?
So we are the leader today in this data movement interconnect. We've got a very solid 65+% market share in the markets in which we play. So as a result, we're growing top line very fast, but we also have a commitment to invest in R&D to continue to open up a gap between us and the competition. So where R&D is 31% of revenue today, in 2020, just to give you a feel, we'd be investing $190 million in this R&D for our sector, which for this sector is a large amount. Writing all the latest and greatest process technology and packaging technology to help us continue to be in the leadership position. in this environment, supply chain is very important. So we're working with all our supply chain partners to ensure that in this difficult COVID-19 situation, we have the supply chain very solid and have contingency plans in place, working with our partners worldwide to deliver the solutions to our customer and not have interruption of supply. In addition to organic growth, which we're hiring quite a few people, we've also had a history of acquiring and being successful in integrating those acquisitions. So in 2014, we acquired a company called Cortina. The stock at the time was around $14. Then 2.5 years ago, we acquired a company called Clarify, and the stock at the time was in the low 40s. Earlier this year, we closed an acquisition of a company called eSilicon when the stock was in the 80s. And you could see that every acquisition has added some very key talent and very key technologies to Inphi and helped us to continue to grow. And we've been successful at not only organically growing and investing and showing a good return on investment for our investors, but also and integrating some of these new acquisitions into the family.
Yeah, it definitely sounds like a combination of these industry trends that you're seeing, fueling growth, the acquisition. You mentioned R&D spend, leading market share. So a lot of great things going on. But we do have this backdrop right now of COVID-19, and it's been an incredibly challenging time for many companies across many industry groups. And from a management perspective, how have you been able to take the challenges here and find opportunities for your business? I know you mentioned supply chain being an issue, but how have you been able to pivot and grow, especially during this time in particular?
Yeah, great question, Alissa. It's a very difficult situation. We've seen it happen in January 1st when we had to shut down our offices in China. We had an office in Wuhan, and we were having a gathering of all our sales force. We typically do this, and early in the year, we had to cancel it. So we had an early view of the situation and started ordering material in January, well ahead of where some of the bottleneck happened, and this really helped us. And we've been following it up in all the different countries in Asia, then in Europe, and then finally the US and South America and Canada and the countries in which we operate. And we've actually done a good job at all employees going home and working very efficiently remotely. We actually measure productivity of employees, and we're finding out that employees are actually more productive in some cases working from home. And so we've successfully migrated to work from home. We've successfully been able to work with our supply chain partners around the world to ensure supply. At the same time, we are very mindful of the difficulties of the situation around us in the community in which we live. So we gave a set of donations. The first set of donation in the first quarter, calendar quarter of this year, were focused on medical and healthcare type of initiatives. And the second quarter of this year, our donations migrated to hunger. And so we identified organizations around the world, and that's in the blog on our website, to which we donated focus on hunger. And we're now actually, because of our, again, diverse workforce around the globe, shifting and looking to donate and contribute to organizations that are going to be focused on diversity and the STEM type of education worldwide. So continued focus on not just our employees and our partners and our customers, but also on the communities in which we serve and be a good citizen as well.
All right, Ford. Well, congratulations on all the success at Inphi, and thank you so much for your time today.
Thank you so much for having me, Alissa. Thank you.
Now, after the break, airline, hotel, cruise, and other travel-related stocks saw some of the sharpest sell-offs when the coronavirus pandemic started to explode. And while these stocks are starting to make a comeback, how are these companies doing in terms of consumer perception? More on that when we return.
IBD Digital gives you access to our premium content.
The best of Investors Business Daily.
A team with decades of experience serving up actionable investing content, a sophisticated tool set to facilitate your own deep dives, and educational resources that will give you an edge in the stock market. We have over 100 years of stock market data, all focused on one thing: what makes a winning stock.
We're taking the guesswork out of investing. Subscribe now to build a better portfolio and make more money in the stock market.
After 9/11 came a major shift in how the airline industry operates, and now in the wake of COVID-19, more sweeping changes are coming to the way we travel. Joining me now to discuss how the travel industry can survive amid this major disruption is Terry Jones, founder of Travelocity and co-founder of Kayak. Thanks for joining me today, Terry.
Nice to be here.
All right, so you're someone who's very familiar with disruption in the travel industry, with the shift to online booking in particular, but how do you think the travel industry now needs to adapt to survive in this post-coronavirus landscape, starting with the short-term issue here, which is dealing with a huge slowdown in business?
Well, it's a terrible slowdown in business. You know, I was running Travelocity at 9/11. Our business was down 70%. Today, businesses are down 90. So much worse. And they're doing great things. You know, the airlines are cleaning airplanes between every flight. Many of them are still blocking seats. They're developing touchless boarding. Hotels are doing much the same. I talked to a Marriott that's doing 72 hours between the use of a room after deep cleaning, and the room gets sealed. So they're doing all the right things in terms of their practices, I think, but they need to do more because they're not telling their story well enough.
So then from a management standpoint, how do you address that? Because like you said, we have these social distancing guidelines, the cleanliness standards here, and there's a huge impact on the business model as well. So how do you reconcile those?
Well, the problem they have, I think, is that a recent survey from MMGY showed that only 14% of Americans say it's safe to fly and 17% say it's safe to stay in a hotel room. They have to change the opinion. Now, Americans starting a little brand advertising, that's good. United partnered with Clorox. That sounds like a good story to tell. But, you know, most of that information is on their website and nobody's going to their website. And if they're advertising at all, it seems to be social media. So I'm going to say something pretty radical. I'd say they need to get back on TV and radio and just start a campaign that here's what we're doing. They can't say it's safe because nobody is going to say that about anything right now, but they can say, here's what we're doing. And they need to do that in a big way. I'll tell you a real short story. After 9/11, I realized at Travelocity, nobody knew how long the lines were going to be for TSA for Thanksgiving. So I put people in 17 airports with stopwatches. We created a moving graph and on TV 24 hours a day talking about that and telling the story. It was good for my brand. It was also good for the customer. So I think they need to tell the story much better than they're doing today and get out there.
That's very interesting because I feel like now in today's world, social media does seem to be the first place where you hear about a lot of these viral campaigns, but it seems like it's going to take a lot more than that.
I think social is great, but usually for airlines and hotels, it's highly targeted around a destination, around a particular person. Look, I'm a 7 million mile flyer with American. I used to work there. I think I've gotten one email about COVID. It's going to take a lot more than that to change people's opinion. I saw an article the other day that was qualifying risks of things to do this summer. It said, hey, a haircut is a high risk and a hotel is a low to medium risk. Well, I don't think that story's out there. And we opened haircuts and tattoo parlors first. I still can't figure that out. So I think they have to tell the story. The TSA may be doing temperature checks. Also, lots of countries are still closed to travel. So where should you go? What's open? I think we're going to see a lot more road trips this summer. RV rentals are up 400%. So I think people are going to be driving. They're going to be going outdoors. They're going to be going to national parks. But airlines, I think could be talking about short flights and where you can go in the U.S. I think it's going to take a concerted effort through every advertising and PR outlet they have to tell people, here's what we're doing, and make a choice.
Right. So clearly public opinion seems to be one huge issue here.
Yep.
But also beyond that, you have a lot of talk about personalization and data-driven experiences, even before the coronavirus pandemic, and in an increasingly competitive industry now to get the few customers who are traveling, how should companies approach initiatives on that front?
Well, of course, the airlines, invented the loyalty program. It was invented in America when I was there. They have deep connections with their frequent travelers. So they need to be communicating that way as well and highly personalizing offers. Obviously, price is quite low right now. I think businesses, unfortunately, are communicating very well the way we are on on the web. So it's going to take some convincing to get people out there and back doing face-to-face travel. I think business travelers want to go. I'm not sure corporations are ready for that yet. So I think it's a long-term story. It's going to be tough for the airlines, toughest on the cruise guys. I think hotels could come back sooner just because of road travel.
Right. Yeah, we're hearing that this is likely going to be a multi-year recovery.
Yeah.
So do you see mergers and acquisitions happening in a big way in this space because of what the industry is going through? And where specifically within the travel industry do you think we might see the most consolidation, if any?
Well, certainly, the online travel agencies have taken a big hit. The advertising companies in travel have taken serious hits. I talked to a company I advise, they cut their staff in half the other day. So those areas are very tough. Now the airlines got some help from the government, and that runs through, I think, September. So we'll see after that. Some of them are fairly highly leveraged, but they're all saying that, they think they're going to be okay, and number of seats are rising. The airlines have the opportunity to put planes on the ground, and to cut staff, which unfortunately they've done some of, or will do maybe more after September. Hotels are in a tougher position. You can't move the asset around. So that'll be tougher for them, although that, the road travel and other kinds of travel will help. Convention travel really hit hard. I'm a public speaker. Obviously, I'm not doing any physical public speaking right now. That's going to take a while. It's going to be interesting to watch Vegas, which is opening this week or early next week, I think. And the gamblers will come back, but the conventions are going to be gone for a long time. So people have to look at, how do I reshape my model and change my cost base if I can? Because as you suggest, this is a long-term issue.
It could be a long road to recovery. We're keeping an eye on it, and we definitely really appreciate your insights today.
Thanks very much for having me on.
And coming up next, video game and esports related stocks have been on a tear. Global X is breaking down the heightened attention on this trend and if it's here to stay. Back in a minute.
I'm Arusha Pierce, and welcome to Investing with IBD. Every week, we are going to give listeners insight on how the market is doing. We'll identify stocks or ETFs that are worth considering and adding to your watch list. Not only do we have investing experts, we like to bring on business leaders. The response from listeners has been amazing. It really feels like we're building this community. Join me every week as we take on the market. Listen and subscribe wherever you get your podcasts.
While video game and esports related stocks are making notable moves as of late, with consumers over the last couple of months looking for additional entertainment outlets as the coronavirus pandemic forced them indoors. But can we expect this trend to see continued gains? Here now to talk about this in more detail is Jay Jacobs. He's head of research and strategy at Global X ETFs. Thanks for being here today, Jay.
Thanks for having me.
So clearly there's heightened interest in the video game and esports trend right now. So what stands out to you the most in terms of what we're seeing in this space?
Well, we're just seeing incredible engagement with video games. So, the story of March and April was people were stuck at home, the weather wasn't that great, and they still needed entertainment. What can you do on your couch? You can watch streaming TV. So there's a lot, huge surge in Netflix subscriptions over the quarter. Or you can play video games. And we saw huge growth of revenue across the video game industry. In the US, across the industry, it was about 9% year-over-year growth that past quarter. And if you look at some of the bigger names like Activision, we saw 21% revenue growth. So clearly people are spending a lot of their discretionary entertainment dollars on video games to keep themselves entertained.
Yeah, well, now that a lot of people are either getting more into their routines at home, or some of the stricter stay-at-home orders in some areas are lifting, do you think that this trend can really have the staying power here now for this foreseeable future? Because I guess life as we know it is still pretty far away from getting back to even a new normal.
It's a question of stickiness around this theme. So have people changed their habits in a way that's going to stick and continue in the future, or is it going to kind of reverse and normalize with the trends that we've seen in the past? When we look at video games, though, we see a lot of stickiness, because what you're seeing is, of course, people are spending more time on video games than maybe they otherwise would if they could go outside or go to a sporting event or something like that. But we also brought in so many new people into the video game and esports community. Think about Gen Xers who maybe haven't played a video game in 20 years are now playing a video game with their kids, or baby boomers that are playing video games with their grandchildren. So you're expanding to a new audience. And then we've also seen huge growth in the esports space, which is pulling in people who have never really watched competitive video gaming before. So we had hundreds of thousands of people watch NBA players play each other on NBA 2K20. We saw millions of people watch racers race each other in virtual Formula One. This is building a new community of esports fans, and some of them will stick. So this means we did see an acceleration, or we will see an acceleration in this theme over the long run.
That's interesting about esports, with those sports stars really getting involved on that front and gaining traction. And esports seems to be going somewhat mainstream now, but do you think that the heightened interest really can last at these elevated levels when we do start seeing those major sports leagues start getting back to their normal schedules and stealing some of the eyeballs away from esports?
Absolutely. I mean, this was a real learning experience for a lot of these leagues about how they can interact with their fans in the future. I don't know if the NBA or the NFL or Formula One would have totally understood this digital versus physical divide that we have in the world right now. But COVID-19 and the stay-at-home economy has given them kind of a crash course in this. So if you're the NBA and you just saw hundreds of thousands of people want to watch your NBA players play a video game online, they're absolutely going to start promoting this in the future as a feature, a way to watch your favorite players, kind of play each other in a different setting, wearing different things in their homes, a much more informal environment where they can talk to each other. So it's changing the game. It's changing how these leagues will interact with their fans, and it's changing the product that they're going to offer. Yes, they will still offer the games on the court or on the field, but I think there will be a new area of virtual gaming where we'll see, fans and players interact.
Now, when you talk about the video game publishing industry, that's a somewhat cyclical business tied to, the popularity of certain titles that are coming out, and even new generation devices that these games are sometimes being played on. Does that concern you at all, the somewhat cyclical nature of at least part of the industry?
It doesn't, and it's because the industry is really trying to move away from that cyclicality. So if you think about the video game publishing industry, it used to be like Hollywood. You'd spend hundreds of millions of dollars up front developing these massive, massive games, and then you just sold them on a copy by copy basis. You went out and bought the game, you'd spend your $60 and you could play that game to death, or you could play it once and never play it again. Just like Hollywood, you go and buy your ticket, you watch it, that's it. The way that the video game industry is evolving is to try to make more revenue off of those higher usage players. So if you buy GTA 5, which is, a very old game at this point, people are still spending money to buy digital items in that game, to buy upgrades, to buy access to new areas. So you have these very intense players who are not just spending $60, they're spending hundreds of dollars on the game. That really allows the smoothing out of revenue over time and eliminates some of that cyclicality around these big feature releases.
So from an investor standpoint, when you're looking at some of the major publishers, whether it's Activision or EA or Take-Two, they had really massive moves from, I think, 2013 to 2018 or so. And the performance hasn't quite been on that same level since then. Do you think that they're really turning a corner here, and that the coronavirus, in a way, was somewhat of a catalyst for spurring a new level of growth?
Absolutely. I mean, as I mentioned before, the Q1 numbers were extraordinary, and that was just capturing kind of 1 month at best of kind of the impact of the stay-at-home economy. But here are the drivers going for it. One, you have the emergence of the Gen Z generation, which is going to start spending more and more money on video games. They are true digital natives, just behind the millennial generation. You have the expansion of people who are playing video games, those Gen Xers, those baby boomers that maybe moved away from video games that now just got sucked back in. You have the recurring revenue model that they're trying to introduce, where people are going to have more in-game purchases. You have advertising. So these games, really don't do that much on advertising, considering how many hours people spend gaming. It's a huge opportunity to deliver advertisements to players. That's essentially a recurring revenue or an incremental revenue on top of selling the actual title. And then you have eSports. You have the competitive aspects on top of this game, where you can sell sponsorships, you can sell tickets, people can participate in the competition itself. So there's so many avenues for revenue growth that we're just scratching the surface of right now. I truly believe this is going to be kind of the dawn of a new era of video games, where they are fully monetizing these very powerful platforms.
And in addition to investing in the video game publishers, another way to play the trend is through the Hero ETF from Global X. And talk to me about how investors are getting exposure to this trend through other areas like chip stocks exposed to the video game industry, in addition to those publishers.
Absolutely. So we're investing in the entire video game ecosystem. So of course that includes, the software developers that are publishing those games. It includes the companies that are building the hardware, the consoles that the games are being played on. It's investing in, the peripherals and the components that go into some of the games, whether it's, controllers, microphones, headphones. It's the entire ecosystem. And when you look at the video game industry, it's, again, it's kind of like Hollywood. It's, are people going to watch more movies or not? It's a question of, are people going to play more video games or not? All of the demographic trends we're seeing, all the engagement trends we're seeing are pointing towards more and more video game engagement going forward. So we really think it's a rising tide is going to raise all ships here, and we want to own the entire industry and benefit from the continued emergence of this powerful trend.
Well, we'll have to leave it there for now, but thanks so much for your time today, Jay.
Thank you.
Well, that wraps it up for this episode. Thanks so much for watching. This is Alissa Coram, and we'll see you next time.